Hello, and welcome back to your South King County real estate update. My name's Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway, and I am back with your local news for the month for local real estate. We'll go ahead and hop right into these slides because there's, as always, a lot to get through. So it is October 2025, and this is your South King County real estate update. So I have a couple classes coming up. The next one is next week on October 16th. That's Thursday, online at 6 p.m. And that is the House Hack Hustle. So if you are looking for a way to purchase a home and have the home actually pay for itself, at least partially, potentially all of it, this is the class for you. This is about purchasing a home that you can rent out part of, live in part of it, and use that rental income to cover some or all of your mortgage. So this is a really exciting class. It's the first time we've taught this one, and I am so excited. And it's been a while since I've taught one of these classes, a little over a year, but on November 4th and 6th, I'll be teaching the Washington State Housing Finance Commission Down Payment Assistance and First Time Home Buyer class. This is a virtual class, and it is a requirement to use the down payment assistance programs. So it is a 5-hour course that we've split up into 2 evenings, all online. You can join from your home, eat dinner while you learn, and get your credit for purchasing a home using the down payment assistance, which is such a cool program that is designed to turn great renters into homeowners without having the down payment be holding them back. And I have my fall buyer and seller guides available, as well as my first time home buyer guide. So if you would like one of these, just reach out. I can send one over via PDF or mail you a hard copy, however you would like to receive it. Just let me know. And into the news, Seattle area home buyers spooked as rates, economic uncertainty rise. So last month, home sellers bet on lower rates and a fall bump to drive buyers off the fence. This didn't pan out. There was a little bit of a drop in rates, and King County home sellers had more homes come to the market last month, hoping that that drop in rates would attract buyers. King County saw 10% more new single-family home listings in September than 1 year ago. In the Pacific Northwest, buying activity usually picks up in the fall when people return from summer vacation and start shopping for homes again. This isn't the spring buying market. The spring is definitely the busiest time of year, but there is a little bit of a bump usually in September when people are coming back to school, getting home from vacation. Mortgage rates reversed their downward trend midway through the month, and then it became clear that the government would shut down. Home price activity, you can see King County here on top. We're just a little bit higher than we were last year. Snohomish County is down a little bit. Pierce and Kitsap are pretty flat, but up slightly. But for buyers who made the leap in September, they had the upper hand with negotiations, really more so than I've seen in a long time. This is a Windermere agent. I feel like all of my buyers lately have been able to negotiate significantly when we're talking about price, closing costs, and buy downs. And this is exactly what I've been hearing from my clients, my real estate friends. Buyers have had a lot more negotiating power. Really well priced and presented ones are still going fast, as they always will. But some of them have been sitting around for a little bit, and there's more homes to choose from than there has been in a while since 2019. And that means that buyers have a little more negotiating power, either a reduction in price or including contingencies that may not be included in offers or accepted in offers in faster paced times. Demand levels changed week to week in September, influenced by broader economic changes, including a drop in mortgage rates to an annual low in mid-September ahead of the Fed interest rate cut. Mortgage rates dropping 0.5 percentage point brought on a brief flood of activity until rates began ascending again, disappointing some buyers who believed the common misconception that cutting the Fed funds rate would automatically lower mortgage rates. The Fed cut the Fed funds rate, and interest rates actually went up that day. So the cut was already expected. that was already baked into the rates that we were seeing. So when the Fed spoke and gave some less encouraging news about what the future looks like, rates went back up. The bundle of new listings meant some buyers had more negotiating power than usual, keeping a lid on home price increases. In many parts of the Seattle metro area, median home prices in September didn't change much from 1 year ago. In King County, it was up less than 1% from a year ago. In Snohomish, it dropped 3.2%. And in Pierce County, rose 1.3% and 7.5% in Kitsap. So you can see this is very area specific as to what is happening in the real estate market as far as pricing is concerned, which is always true. It's always area specific, but a little bit more drastically right now. Historically, new listings wane starting in October as the winter months cool activity. If a sweet spot for buying does exist, it's right now. And I would totally echo that. There is a lot of opportunity for buyers right now. Maybe not everyone can afford to hop into the market, but those that can, there are some sweet deals out there. There's not as many buyers out there, and there are so many homes on the market, so fewer buyers competing over those homes. And that means that you have more negotiating power as a buyer in this moment. It would take 12 weeks to sell King County's supply of single-family homes. Compared to a healthy market, that is still fast, but it's the longest gap between supply and demand in 7 years in King County. We are closer to a balanced market than we have been in a long time. And for condos, that gap has also reached new levels with a surge in new condo listings last month. It would take 19 weeks to sell off King County's supply of condos. They interviewed an agent and he said, nobody wants condos right now. I mean, it's unbelievable. There are so many condos for sale. The median sale price for a condo in King County was $527,500, down 6% from September of last year. So condos and single family homes, completely different markets right now. The median condo price also dropped 9% in Snohomish County. That's a pretty big drop. Despite the drop in prices, owning a condo remains expensive with rising homeowners association and insurance fees. That's caused condo buyers to dwindle and create the need for sellers to compete for their attention. Redfin estimates that there were nearly 77% more condo sellers than buyers in the Seattle metro area. So we're kind of at that balanced market for condos. Over the past few years, I definitely have seen those condo association dues go up on average. There are exceptions, but mostly the costs of everything have gone up, right? So the condo dues to cover that change have gone up, and between your mortgage and the condo dues, some people just can't afford that right now. So if we look at the median price of home and condo sales for homes, Southeast King County is down slightly from a year ago, but all the other 4 areas listed here are ahead of where they were last year on price. For condos, we have dropped in Seattle and North King, pretty flat in Southeast King, and then Southwest King and the East Side are actually a little bit pricier. And the number of home and condo sales, we have in Seattle, East Side and Southwest King outpacing where we were last year. North King is flat and Southeast King has seen fewer condo sales than 1 year ago, or home sales, excuse me. Condo sales in Seattle, we're actually outpacing where we were last year and the East Side, but Seattle by a more drastic amount. North King's pretty flat, Southwest King down a little, and Southeast King is a little bit ahead, but not by much. So home price growth is moderating. These are national numbers. We're still seeing home price growth overall in the nation. But while national prices continued to climb, local market conditions have become increasingly fragmented. This regional divide is expected to continue influencing price dynamics and sales activity as the fall season gets underway. And that is from the senior economist at Realtor.com. And just to show that the market is really varied depending on where you're looking at. Seattle is just to the right of the middle here, so we haven't seen drastic price drops overall. But Most of these cities in the red are the places that saw the highest price increases during the pandemic and the last several years. These are the places where we saw prices like really accelerate from what they were. And the ones in the green did not see that acceleration earlier on. So now they're kind of catching up. I have brought up this quote before from Warren Buffett: be fearful when others are greedy and greedy when others are fearful. Right now, there's a lot of fear. Buyers are seeing the rates fluctuate up and down, and they don't want to hop into the market. Prices are still pretty high, but there's a lot of opportunity right now. So I'll get into this a little bit more in a minute, but there's a lot of opportunity right now to take advantage of what is to come in the future. And that brings us to our hyperlocal breakdown. For new listings, most areas did tick up from last month, except Federal Way. But compared to a year ago, Federal Way up 22%, Auburn up 33%. Renton's actually down a little over 5%, and Kent is up 12.5%. For homes for sale, this is our overall inventory of new homes coming to the market, plus what's been sitting on the market for a little while. We're up double digits in all areas compared to 1 year ago. That has ticked down in all four of these areas since last month. For pending sales, we are all over the board here. We're up in all four of these areas from 1 year ago, but we have Renton, Federal Way, and Auburn up from last month, and Kent down from last month. So again, very area specific on how many homes are going pending in a specific area. And the median days on market. So this is how long a home sits on the market before a seller accepts an offer. And we're up to 24, 27 days in Renton and Federal Way. Kent and Auburn right around 20. So these numbers are significantly more than it was even earlier this year. But that's kind of the cycle. We saw longer days on market beginning of the year, December, January. And that is pretty common, is to have longer days on market in December, January than throughout the rest of the year. Median sales price continued to tick down in Renton from last month. Everything else is not too drastic, but from a year ago, Federal Way is up 13% and Renton is down 9.4%. So you can see how different these markets are as far as the trajectory of price. And Auburn is completely flat. Kent's pretty much flat. For mortgage rates, last time we met, our weekly average mortgage rate was 6.26. Our daily rate was 6.35. Now we are at 6.3, back to its lowest level in about a year. We've had some fluctuations, but overall it's remaining within a tight range. The modest drop brings the average rate back to where it was 2 weeks ago after a string of declines brought down home loan borrowing costs to their lowest level since early October 2024. Despite the decline, rates continue to hover within a narrow band they've maintained since mid-September, as markets remain in a holding pattern amid fiscal and monetary uncertainty, including the ongoing government shutdown. Last time the Fed met, the Fed chair, Jerome Powell, signaled a cautious approach to future interest rate cuts. That's in sharp contrast with other members of the Fed's rate-setting committee, particularly those who were appointed by President Donald Trump, who are pushing for faster cuts. So there's a little bit of a disparity on the board of what they think should happen, but the Fed chair is being cautious moving forward. We don't want to trigger a recession, which if they cut rates too quickly, that's exactly what's going to happen. Mortgage applications, which include loans to buy a home or refinance an existing mortgage, fell 4.7% last week from a week earlier, according to the Mortgage Bankers Association. But applications for mortgage refinance loans made up 53.3% of all applications. So these are people that are not moving, not getting their home for sale, not purchasing a home. They're just refinancing the home that they are currently in. And that is making up the majority of the mortgage applications. And for today's interest rate, we are at 6.32. Looking back, we have had a lot of fluctuations recently, but if you look at this chart, this is between 6 and 7.5. So this year, we've basically been between 7.25 and 6.25%. So it's really just a percentage difference over the course of this whole year so far, even though this chart makes it look like it could be a lot bigger drop, but it's remaining fairly flat. Mortgage rates lowest since Fed Day, and this came out earlier today. Mortgage rates saw their biggest day over day decline of the past several weeks today in response to unexpected news regarding additional tariffs on China. Trump had previously scheduled to meet with China's president in 2 weeks, but today said there was no reason to do so and that the administration is currently calculating a massive increase in Chinese tariffs. This just shows how quickly mortgage rates react to news. This happened earlier today. Rates have dropped because the tariffs have a negative effect on our long-term economic projections. And if we have poor economic projections, then mortgage rates will come down. What's good for the economy is bad for interest rates and vice versa. So things that the Fed are looking at, they'll meet in, I think, 4 weeks. Inflation remains elevated, so we're above that 2% target rate. They want to see this drop to 2% before reducing the Fed funds rate. Unemployment is holding steady, 4.3%. We're still in this green. There's a lot of people with jobs still. However, it is increasing slightly. And job growth is stalling out. So there's not new jobs being created to take those unemployed people in and give them jobs. And the government shutdown brings another issue to the Fed making decisions, which is they may not have up-to-date information. This quote from NPR, the Fed faces another rate-setting decision in 4 weeks, and policymakers would like to have up-to-date information on hiring and unemployment. However, a lot of the people that crunch these numbers are out of a job currently because the government is shut down. So looking forward, mortgage rate projections, we're right here at the 6.8 or slightly lower. Fannie Mae is the most optimistic. By the end of next year, they think it'll be 5.9, but there's a couple other estimates here as to where it'll end Q4 of next year. So it is a gradual decrease. Interest rates are not likely to jump down unless we have really bad stuff happen in our nation or in the world. And none of us want really bad things to happen everywhere. So this gradual rate decrease is currently what's projected based on the information we have available. For over 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. And the average spread between these is 1.76. So 176 basis points is the average spread. But you can see the gap increases here. So the current average spread from back to 2023 is 2.59. So that is significantly more of a gap than our prior average. But back in 2023, it was 2.76, and now we're down to 2.10 as the spread. So things are getting closer. When there's a lot of uncertainty in the world about the economy and just in general, political uncertainty, this gap tends to get bigger. And so this is showing that there is less uncertainty moving forward than there was years ago. As of when this graphic was made a couple days ago, it was 6.3% for the average mortgage rate. And if it was the average gap from before 2023, it would be at 5.96 if we had the standard gap there. So the 10-year Treasury, we know that the mortgage rates follow the 10-year Treasury pretty closely. And the 10-year Treasury is forecasted to come down. As I said, there's decisions being made, influential people saying things that can affect this all the time. But overall, they are expecting the 10-year Treasury yield to come down and therefore mortgage rates to come down. As the rates get lower, buyer demand gets stronger. So for most of the year here, we've been in this 6.5 to 7% range, which means there is limited buyer demand. But once we drop below that 6.5 line, we're getting good buyer demand. So there are more people in the nation heading into the buyer market and increasing buyer demand. With expectations growing for a rate cut at the Fed's next meeting, could be just the beginning of a stronger housing market heading into the fall. And that's the CEO of One Real Mortgage. For US home price expectations, this is over the next 5 years. The most pessimistic in the bunch think home prices will raise about 5% over the next 5 years. That is a really modest projection. The most optimistic quartile thinks it'll be about 26% increase over the next 5 years for home prices, and we'll probably land somewhere in the middle. So the average of all of them is 15.3% home price appreciation over the next 5 years. So that is a lot closer to normal appreciation over time that we've seen if you look further back. And just one last plug for the home buyer and seller guides. Let me know if I can get one of these over to you, or that first time home buyer guide. The House Hack Hustle. So have your new home pay your mortgage, or at least some of it, if not all of it. You're not going to want to miss this class. I am so excited about this one. It is just a really fun topic and a really fun way to look at home purchases. And the down payment assistance class and first time home buyer class, which is qualifying you for the Washington State down payment assistance program. So if that is something you were interested in, make sure to sign up, save your spot today, and I would love to see you there. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I'd love to have a conversation with you about the market in your area or an area you're interested in potentially moving to, or answer any questions about what I covered today on the show. Thank you so much for joining me. I will be back here next month in November for your South King County real estate update with your local real estate news. Thank you so much for joining me, and I'll see you next time.